the economy is starting to contract. Because of that, the price of oil will fall. In January, I put on a trade. I showed a video. I put the video up. I think it was about January 4th, beginning of the new year. XLE stock, which is the energy sector ETF, I said was undervalued. It's moved up quite a bit. I'll show you charts on that. I'm getting out of that stock. USO stock is a way you can play the price of oil. I'm beginning the process of shorting oil. I'm using USO stock to do so. I'm going to be selling into XLE stock after I've taken the profits on that trade from January. And from this point forward, I see the economy contracting even further, that we're going to see big moves down in the price of oil. USO stock moves lower. XLE, the energy sector ETF, falls along with it. Let's jump in and I'll show you how I'm going to make some more profits. Here's a thumbnail from the video I put up. It was January 4th. I published the video on January 5th. Put the trade up. I bought in, if you go backwards, you can see it even dipped a little further than when I bought it. I bought in at 85. And I got out of 50% of the position at 95, took a quick $10. But then recently, since the beginning of May, this is XLE stock. XLE, of course, is the ETF for the energy sector. I felt it was undervalued. I put up, broke down all the different stocks. There's about, I think, maybe 29 different stocks. They're all underpriced relative to their future earnings. And I felt that we'd see appreciation. You know what? I might not have actually even been right. That stocks in general just moved higher. And that probably is what I kind of felt was going on there. I don't think that the sector itself rallied so much as the broader stock market. And guilt by association, I made $10 out for that. Got out of the rest of the trade about 2-3 days ago. And what I'm doing now is looking to sell calls on XLE stock, the energy sector ETF. I'll sell calls, I'll buy puts, but I'm also doing exactly the same thing. Here is WTI crude. Oil prices, I break everything down based on the economy. Take a look at some of the bigger stocks that we've seen moving. Starbucks, Uber, McDonald's, Disney took a dump, Tyson Foods. We're seeing Yum Brands, Nabisco. Oreo cookies are sitting on the shelves much longer than normal, and that's a shame. But we're seeing the consumer who is stretched too far opting away from fast food, McDonald's, and instead eating at home because they're just stretched beyond belief. Interest rates are too high at this point, too restrictive, and any debts that any consumers have, they're paying on those debts at a higher interest rate. And this is taxing the consumer. So Disney, we're not seeing, Disney's not seeing as many people visiting the parks as normal. They're going to see zero growth rate, is what they said in their meeting, the financial numbers that just came out, I think, 2 days ago. Given that, if the economy slows down, which I fully believe it will, what comes next? Oil prices moving lower. Stock market, broadly speaking, is going to move lower. So I'm taking positions, selling calls. Now this is WTI crude oil. I'll sell calls on USO stock, which is the ETF against oil. Sell calls, buy puts. The idea is that by selling those calls, I'll bring in some premium to pay for my puts. I do not expect that we'll see the price of oil rallying too much higher. Let's break down a few more charts. Here's a bigger look at what's going on. So oil right now trading above roughly $75, range of about $70 to $80 over the past pretty much all of 2023 actually. Didn't really move too far. My expectation, we go sub 70, maybe fall down to about 50. I'm being conservative. We might go as low as 40, but I think that's a bit of a stretch. 45 to say 60, I see that easily in the price of oil WTI, West Texas Intermediate. Now, here's something that I like to look at on a regular basis. This is oil in the bar chart, just showed you that chart, versus the U.S. 10-year Treasury yield. Yields are far higher, and because of that, we will see yields coming down, oil will follow. Typically, it's sort of a good barometer as to what's going on with the broader economy when you look at interest rates versus oil. The economy is running at max at this point. Basically, take a look at unemployment rates, which were at 3.86% on the unemployment. We're pretty much running at full speed with employment. But Disney, they're probably going to start laying people off. McDonald's, they're going to cut staff as much as they can. They're already bare bones. Starbucks, they're going to be doing something. This is the beginning, the first layer, sort of the shot across the bow. And I'm reading a bunch of articles where the momos are just sitting there saying, you know what? We're just going to keep going. Good luck with that. The consumer is contracting. Revenues are going to decrease. We're seeing that already with companies. Those stocks go lower. What happens next? Federal Reserve lowers interest rates because they've done too much damage to the economy. Oil supply stacks up. Too much oil, price of oil goes lower. Classic economics. So as we see the U.S. 10-year Treasury in the orange there fall back down, because of the economic situation that we're in, oil prices will have already moved lower. And I'm expecting kind of a big move lower in interest rates. And here I'm showing XLE versus USO. So this is XLE stock, the energy sector stock, versus USO, the ETF versus the price of oil. XLE is probably going to get a lot more business out of me going short XLE versus USO, because I believe XLE on a sort of ratio basis is now overpriced more so than what USO is based on supply and demand. But if USO stock, the ETF for oil, does fall and we see a big move to the downside, XLE stock will dump. Now, one of the things I'm asking, one of the big questions I'm asking is what's going to happen with interest rates when they do come down? I don't think the Federal Reserve is in a position where they can lower interest rates anywhere starting now till November 6th and 7th. They have a meeting. That's Wednesday and Thursday, right after Tuesday, the U.S. presidential election. I don't think they can do anything. I mean, if things get real bad, yeah, they'll have to step in. But we're still seeing price pressures increasing. We're seeing month-over-month gains that are too high to bring inflation down to the 2% level. The Federal Reserve, with unemployment levels at 3.86%, they can give up a few jobs in order to get inflation in check. To keep their own credentials, they have to keep inflation in check, which means interest rates higher for longer, which means consumers get choked out, which means the price of oil, because of too much supply, goes down. XLE stock goes down even further. Here's a quick look at some of the other stocks making news. Uber, big drop down there. Starbucks, falling off a cliff, 15-17%. Management sitting there saying, we're on track. And that sold the stock even further for Starbucks. Yum Brands, they fell. McDonald's, sliding lower. The impact of the news wasn't nearly as much. TSN, Tyson Foods, they're seeing future revenue decline, and because of that, TSN stock fell off. And then, of course, Disney took a dump just 2-3 days ago. This is telling us a story. Pay attention on Thursday mornings to initial claims, continuing claims. Companies are going to start moving and laying people off, pink slipping them. All right. Next week we have, I think it's Wednesday, we get inflation, CPI data points. They need to fall lower, but we're still not seeing those price pressures lower, which means the Federal Reserve will keep interest rates higher for longer. The consumer gets choked. XLE stock goes down because USO stock, the ETF for oil, goes down. I'm putting positions on both of them, but I'm really going in hard on XLE stock because I think it's rallied too far and this economy is probably going to skid out. Make sure to hit that like and follow button if you're looking for written content. My economic data points, I did do something for this specific video. There is an article up on my Substack. The link is down below. Make sure to sign up for the free email newsletter. We'll see you in the next video.